It looks like the Bahamian government has $4.2 billion sequestered. And then there's another $1.2 billion alleged to be sitting in the US, FTX US, another $400 million of cash. But now what everybody's focusing on are all the assets inside of Alameda. In order to sell Alameda, which will be done in an auction process, you need a first bidder, a backup bid. And that's going to end up being somewhere in that $800 million to $1.5 billion range. That's sort of the bid ask right now on that. So there's a ton of cash sitting around here that nobody's talking about Sam Bankman-Fried anymore, or the trial, or alleged fraud.
Since his involvement in the whole FTX debacle and his insistence that Binance, rather than SBF's highly questionable business practices, down the crypto exchange, Kevin O'Leary's popularity in the crypto industry has dwindled greatly. Even after 4 months and lots of damning evidence against the disgraced former crypto billionaire, the Shark Tank celebrity's subtle ploy to somehow whitewash SBF's involvement in the collapse of his crypto empire is both baffling and alarming. It is even more alarming when you realize that O'Leary echoes sentiments held by U.S. regulators and lawmakers. Since the inception of the case, there have been obvious ploys to absolve the 30-year-old of any major crime in connection with the almost overnight collapse of FTX, its sister company, Alameda Research, and over 100 other firms. Earlier in the week, O'Leary appeared on TraderTV Live to discuss some new developments in the case and ongoing trial, as well as the recent regulatory crackdown on crypto-related firms by the U.S. Securities and Exchange Commission. During the interview, the Canadian venture capitalist noted that investors and probably regulators are now more concerned about following the money instead of the trial and bringing SBF to book. This raises a lot of red flags about how the case is being handled and what the outcome will be. As no Kevin O'Leary interview is complete without his new favorite villain, the Shark Tank celebrity also speaks about Binance chief executive Changpeng Zhao, whose cryptocurrency exchange has been under heavy regulatory scrutiny since the FTX collapse. We will now take you to O'Leary's interview as he discusses FTX, the SEC's ongoing onslaught on the cryptocurrency industry, and Binance. Please ensure you like this video, subscribe to the channel, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks, enjoy the video.
The narrative on the whole FTX issue has changed. It's no longer about the trial, which will happen who knows when, but more about recovery. And so since this story broke November 6th, a lot has transpired in terms of identifying assets. For example, now remember, these are alleged and rumors, but it's where there's smoke, there's fire, because the regulator has not released the trading records yet from each of the accounts. But here's what we got so far. And obviously, I'm an active participant. I've got my own army of lawyers like everybody else does, both as an equity shareholder in both FTX International and FTX US, but also I had over $10 million in assets inside multiple FTX accounts, which were scraped with no trading records left. But now what everybody's focusing on are all the assets inside of Alameda. Remember, Alameda bought a lot of stock, a lot of deals. They own a ton of Robinhood. They have a bunch of other assets in public companies. They own a piece of WonderFi, for example. And so all of these are being looked at by hedge funds and high net worth individuals and private equity firms. I have to be, I'm always optimistic, but before this whole thing plays out, there's going to be some recovery. And I don't know how long that's going to take. But what everybody wants right now that had an account is to turn on the server again so you can see your account, see the trading records, but keep it gated so you can't put money in or take it out, but at least see the records before April 15th when everybody has to pay their taxes. And so you got a lot of cross currents going on, but nobody's talking about Sam Bankman-Fried anymore, or the trial, or alleged fraud. They just want the money, and that's the way it should be. But the real question is, will this change how we invest? And the answer is no. So let me explain why. FTX was a startup, a big one, but a startup. And we all invest in startups. I don't care if you're private equity or you're venture, there's capital around for startups, because the returns, if you get a successful deal, are extraordinary. So if you look at data back from 1954 in the Boston area where venture capital started, and you look after all those decades, 8 out of 10 deals either fail or are living dead, and 2 out of 10 are extremely fantastic outcomes and pay for all the other 8 mistakes times 20, times 30, times 40. So for every FTX, there's a Google. You know, for every Lehman Brothers, there's something else. There's always something going to zero and something going to the moon. That's the way it is. And so when you look at due diligence, you ask yourself, okay, let's say we had done more due diligence. Would that change the outcome when you know 80% failed? Probably not. Now, they fail for various reasons. In this case, alleged fraud, and we'll see how that plays out. But this doesn't change anything about the way I'm going to invest or, you know, how any of those other firms you just listed are going to invest. And the diligence done here, I don't know if you know this, but Tiger spent millions with Bain Capital to diligence this platform before they became one of the lead investors. And everybody knew that. So there is a lot of, you know, when a deal like FTX US comes out and it's so hot to get an allocation, they're not worried about due diligence because they know 8 out of 10 times it's going to fail. They're hoping they're going to get one of those unicorns. The one thing I'm very, not proud of, but happy about, when the FTX US deal, when the word got out that I got allocated equity, I got inundated by institutional capital, high net worth hedge funds saying, you got to give me a piece of your allocation because you owe me. We've been doing stuff together for 20, 30 years. But I had this gut feeling, not that I was involved in something nefarious, but it was so nascent, so early, so volatile. I said, no, I'm not going to put anybody else's money into this thing. I'm going to keep my own dough in it. That's it. And whether it's a success or a failure, I'm not going to put someone else in front of that freight train. Either way, I am so happy I did that because other people that are managing other people's money that put it in FTX are getting litigated in both directions. I'm not one of them. I look like an idiot by myself. That was all my own money. It all went to zero. It was all in my operating company, of which I'm 100% owner. So the operating company took a hit. I hate losing $18 million. It really pisses me off. But, you know, I've had great investments and I've had bad ones. This goes in the bad column.
In all this previous interview related to the FTX collapse, O'Leary has been caught in a series of lies and half-truths, and this interview is no different. In early December, O'Leary repeatedly noted that he lost $15 million in the FTX collapse. During a CNBC interview published December 8, he said, and I quote, total deal was just under $15 million, all in. I put about $9.7 million into crypto. I think that's what I lost. I don't know. It's all at zero. Then he also noted that he had a little over $1 million in FTX equity. The only thing that has changed between the CNBC interview and his latest interview is that prosecutors are running a fine-tooth comb on how Sam Bankman-Fried managed the exchange's resources. Things have gotten heated, and O'Leary suddenly manufactures an additional $3 million out of thin air. There is definitely more to his involvement in this case, and hopefully the extent of everyone's involvement will be revealed as the trial progresses. Let's get back to O'Leary's interview as he discusses his thoughts on the impact of increased regulatory scrutiny on the entire cryptocurrency industry.
To your point on regulation, if there's any silver lining to this whole FTX thing, and let me tell you, when I went down to those hearings in Washington, when the hearings were over, they take about 4 hours or so. All the senators are still there. So we started, you know, we mingled and we started talking. Here's what I realized about this. These senators are really, they're fatigued. They're really tired of gathering every 6 months when the next crypto company blows up and goes to zero. I mean, just last week, Genesis filed for bankruptcy. Every week, there's another one going to zero because they're totally unregulated and they keep issuing tokens that are worthless. The latest, you know, game that FTX did as well as Binance is they issue a token that supposedly gives you some special ownership of the platform. That's not true. You own nothing. There's no rights to it. It just gives you trading discounts if you own the BNB or the FTT token. But if you look at, let's say, the reason FTX went to zero is CZ, the competitor of FTX, Binance's head guy, put 550 million tokens right on Sam's lap on November 6th. He couldn't carry it. He didn't have 550 million cash. They had to go to bankruptcy. And I think it was a brilliant move on CZ. He wiped out his competitor. But now CZ's got the same problem. He's got regulators humming around him like a wasp around a beehive. And he's got $64 billion worth of BNB tokens in 2 wallets instead of 97% of all the allocation. Well, what happened? I don't know who owns those wallets. Nobody knows. Nobody knows who owns Binance anyways. But what happens if one of those wallets, somebody wants to sell $30 billion worth of tokens, just like they put them to Sam Bankman-Fried? That'll be the sound of Binance going down the toilet. So these things are going to keep happening over and over again. And my point about regulation is the senators, well, they're pissed. And you ask me why Gensler is coming down heavy-handed on Kraken last week and shutting down staking and telling every player in the industry in the U.S., read the room. I just whacked Kraken for $39 million fine. Who's next? Bring it on. So that kind of environment is getting very, very aggressive. And the regulators are being applauded on by the senators and congressmen and women who are saying, what is this? We've had enough of this stuff. So I think the good news for me as an investor, frankly, to turn this into a positive story, would be that I own regulated exchanges. WonderFi is regulated. In Canada, it's regulated. I think the value of regulated exchanges is going to go up over the next few years, while all the unregulated ones get put out of business or go to zero by the regulators. So that's where we're at in crypto. You got to get on board on regulation. You got to stay out of the way of Gensler at the SEC and other regulators. Those hombres in Washington are not happy. And they poke the bear. FTX poked the bear. The bear's awake, and it's pissed.
Give me a time frame here. When do we see meaningful regulation?
Hearings right now. Banking Hearings Committee looking at digital payment systems. I think there'll be another set of hearings early next month, in March. They're going to keep coming. Elizabeth Warren's on a warpath right now about crypto being used for nefarious transactions. She's after, allegedly an $8 billion USDC transaction that went to a rogue nation. I mean, it just could. The tone of this market is so negative, it's probably time to get back in.
Meanwhile, in a tweet he put out on Monday, O'Leary noted that venture capitalists are turning toward artificial intelligence to avoid the carnage in the cryptocurrency industry. Here's the tweet. Venture funding for new crypto projects is virtually dead, and aftermarket trading for existing projects is at massive discounts. Reason? The regulator is now regulating by enforcement, penalties, and massive fines. The venture community has moved on to the next big thing, AI. While O'Leary is partly correct about the current situation in the cryptocurrency industry, it is not difficult to agree with comments under his tweet, pointing out that he is partly to be blamed for what is happening in the crypto industry and market. What are your thoughts on Kevin O'Leary's interview about FTX and regulation? Do you believe he echoes the sentiments of the majority of lawmakers in the United States, and how do you think that can impact the future of the industry? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and check out our other videos. Thanks for watching.